Well, the question of whether September was going to be a pullback month's been answered, as we're now seeing pullbacks that we haven't seen this bad since 2011. And as traders and investors become fearful of what's to come, I'm seeing something completely different on the screen behind me, which is begging me to ask the stock market, are you fibbing me? Hi, Optionetics Power Profit Trade members. Welcome to Tom's Trading Room, where we offer analysis, insight, and step-by-step comparisons of alternative investments other than just buying stocks. Do me a favor right now, down there, I want you to hit that like button as it helps support the channel. Also on this side, if you hit the subscribe button and ding that bell next to it, we'll notify you as soon as a new video is uploaded. Okay, I want to talk about three main points today. Number one, where do we go from here on a seasonal chart? Number two, what is a Fibonacci sequence? And number three, how can I use this to spot buying opportunities in the market? So let's start with the chart behind me and get going. We have right now coming out of very uncertain days in September. And as we go through the week that ends on the 25th, the same thing's happening here. We've got 3 of the next 5 days that are down, but look what happens at the end of the month, the last 3 days of September, and then as we fall into October, things actually get bullish. This is what's kind of shocking me, because if you look around out there, volatility is up, the market's pulled back really hard just in the last week. It's got everybody nervous of what's to come. So I've got some disparities here between what I'm hearing on TV and what I'm seeing here on my charts. So what I want to do is I want to talk about something called Fibonacci. And Fibonacci, how we can use it to spot buying points in the stock market. So Fibonacci is just simply a sequence of numbers where we take 2 numbers and add them together to get the next number. And then we take those 2 last numbers and add them together to get the next number, and so on and so on. All right, this creates the Fibonacci sequence, and from there we can then get something called the spiral. So if you look at Fibonacci sequences, they start with 1, and then 2, and then 3, 5, 8, 13, 21, etc. And all we're doing is we're just adding up the last 2 numbers to get the next sequence. From there, I'm able to create the spiral, and from the spiral, we're able to actually do something with the markets by using what's called Fibonacci retracement patterns to find these pullback areas that could be some great buying opportunities. So what I want to do from this point is I want to look at stocks, I want to look at bonds, I want to look at currencies, commodities, and even, yes, the FANG stocks to find potential buying opportunities in the market. So what you're looking at here right now is a chart of SPY. This is the S&P 500 index. And what I've done is I've left some room over here so that I can work with this. And you can see here, SPY has gone from a low back here in March of around 218 was that low. And then we ran up over the course of the last several months up into around Labor Day when we hit that high up here that was very close to 360. So we'll call that high 360. Now, we've pulled back some already, but how far did we pull back before we hit a Fibonacci sequence? All right, well, the first area in the pullback, and I'm going to round these off, 306 on the S&P, SPY, 290, okay, and 274. Now, let me explain what each of those are. The first one, 306. 306 is a pullback, which is called the 38% pullback, all right? 38.2% to be exact. But that's a 38% pullback from the lows back in March to the highs recently. We have our buy area right here, the 38% pullback. The 50% retracement is also another buying opportunity. That's at 290 for the S&P. And 61.8 is at 274, and that can be a third buying opportunity right there for SPY. So we have 3 buying opportunities at 3 different levels, as you can see here. And I like to call these aggressive and intermediate and conservative in terms of where you buy in the sequence. And you could even space these out. Maybe you're an investor that says, all right, I'm going to buy 1 unit at 306, 1 unit at 290, 1 unit at 274. That is SPY, and that is the S&P 500 ETF. All right, so let's take a look at a few others. And I'm not going to put buying zones up here unless it's something that I'm really interested in. So if we're looking at, say, bonds, all right, the bond market really, it doesn't show me any really great buying opportunities. In fact, if anything, there was a buying opportunity at bonds right down here around 160, or around the 161 area. And since then, bonds have started to make a move back up. So they've already hit that retracement level. Right, so that's bonds. UUP is the US dollar. I really don't trade this one, but if you take a look at UUP, let me hit that one again there. You can see UUP's really kind of done the opposite of the stock market. And while the stocks have gone up, cash has gone down. So cash has gone down, and it's lingering right down here near these lows at 24.90 for UUP. So really nothing to concern ourselves with there. All right, how about oil? So oil is USO. And USO has, this is a really tough one to look at because you see the move down. We were at the time, $95 for USO. And remember, this was all reverse split. So for some of you looking at this saying, no, USO was never at 95. It really never was. But when everything got reverse split, it propped that price up. Right now, we've gone from about 17.5 back here in April up to around 31. And we peaked out at 31, but we're nowhere near, nor do I believe we will get anywhere near that low or that retracement level up there in the 40s. Right? So I don't see that happening anytime soon, so we're going to skip that chart too. Let's go to gold. So stocks, bonds, currencies, commodities. If we take a look at gold, gold could give us a really good indication, again, of what's going to happen with this yellow metal. Lows back in mid-March, 138.04. Again, this is GLD, the ETF for gold. The highs were around just above that 195 area, very close to 195. I think 194 was our high. Well, we started pulling back. But where's the buy zone? All right, here's the buy zones. 172, all right, that's 172 for GLD. Then 165 is the 50% pullback. And then we've got 159 on here, and that's the 62% pullback. All right. 172, 165, 159. That's for GLD. Now let's take a look at some FANG stocks as we move forward and see what they look like in terms of pullbacks using the Fibonacci ratio. Let's start with Facebook. So here's FB. And Facebook was a $148 stock back in March. And just a few weeks ago, we were up close to 310. Let's going to call this 308 up here. So this was 308. But it has pulled back. And folks, today, its low hit the Fibonacci resistance at 243.59. There's your low, all right, 243.59. And that thing came dangerously close to it. Now that's the 38% retracement. If you want to look at the 50% retracement, we're looking at about 225. All right, so 224.96, I'm going to round that up to 225. And then 206 down here for the 61.8% retracement. Again, that is Facebook. Let's see if everybody else is pulling back here in the world that we like to call FANG. All right, so let's take a look at Apple. Here's Apple. Apple, too, opened and traded just below the 38% retracement before pulling back up. And it hit that 38% retracement, which is 104.35. All right, did that today. The 50% retracement would take it down to 95.14. 61.8%, you're talking $85.92. That is Facebook. Let's take a look, or excuse me, Apple. Let's take a look at Amazon. So Amazon came close, but it has not yet pulled back. It's gotten up as high as near 3,600 from a March low of below 1,700. You're talking about a 38% pullback, which would take it to 28.22. Didn't hit that today. All right, it did get as low as 28.71, but that was still 50 points before the 38% pullback. So 28.22, 26.03 is the 50% pullback, and 23.84 is the 61.8% pullback for Amazon. All right, next, here's Google. And Google has come way off of that high. And again, this is 17.17 up here is the high. The low was 1,054. We've had a pullback in Google, just like all the other stocks in FANG, but we've already gone through the 38% retracement at 1464. All right, 1464. Now we're getting dangerously close to that 50% retracement, which is 1385, and of course 1307.50. That's the 61.8% retracement. So when you look at all of these stocks right now, we're seeing some potential buying opportunities using Fibonacci ratios. And again, how do we use the Fibonacci ratio? We look at an absolute low on a chart going back a certain amount of time. I took 150 days. So these are all 150-day charts. I took the low from 150 days ago. I took the high from 150 days ago. And where are we now? And a lot of these stocks have pulled back dramatically, suggesting that they're ripe to start looking at as buying opportunities. So when you mix this with us coming into the last week of September and of course the first week of October, which look bullish, it might be a recipe for buying when everybody else is selling.